Good morning. Happy Monday. Excuse me. My throat's a little whatever. So I thought we'd start the week here with a review of the weekly charts. We usually look at the 60-minute and the daily. And Monday can't be happy. It's a new Monday. We made it. Got through the weekend. We're still breathing, Alex. So let's see what this week is going to bring us. I'm hoping this is going to be the final washout here. I don't see how this pattern on the weekly time frame is going to be anything else but that. You had this little consolidation, wide, whippy consolidation. And so it seems inevitable that the next stop should be down here, thereabouts, or whether it just keeps going, to, crushing this bear market, Santa Claus destroyed, however you want to look at it. But, we've got this Fed announcement coming on Wednesday, and ultimately that could be the last drop. Whereas, let them raise interest rates or not. Seems undecided. And if they do or don't, hopefully the market just drops from there into this support level, and we'll see what happens on the smaller time frames. If it begins to turn around, we'll monitor, the put call ratio, the NYSE tick. We'll look for momentum divergences, so on and so forth, looking for the turn, assuming that it does come, or if it keeps going. So as Friday was a trend choppy, grinder to the downside. I kind of explained it Friday in the room as, a nervous shorts, every time it dipped, it just blipped right back up again and then, rolled back over again. Every high downtick reading was met with buying, and then every little blip to the upside was met with selling, and just produced a grinder lower. So now markets are down. We'll take a look at the futures. The equity markets are down, as you can see here. And still there. So we're looking for this to go down this week, hopefully into the news event. And that is a washout. And we'll see where it goes from there. The thing to do is to mark off your reference points, set alerts, and get ready. Assuming that it's going to go down there, we set different markets. So looking at the transports, which had another ugly week and had been showing some relative strength over here. And then they fell apart. This little consolidation at this level of support failed. When that happens, we look for a measured move lower. And that would put it probably somewhere around here. I do see this little level here, but it seems inconceivable if that is what's going to hold. I recognize it, but ultimately this 160, 162, somewhere down here is where you want to set your alert. And if transports are down there, your alert goes off. And so based on setting up our game plan here, I don't know whether the transports will reach some reference point of support first, or whether it'll be the Dow or the Russell or the S&P or whatever. So I'll set alerts at all of them. I'll set my tick extremes up. I'll set my put call ratio alert up. I'm going to set my VIX alert at a higher level. And I'm going to see when one goes off, maybe the others start clicking. And then we start looking for some price pattern to suggest a low. Well, if it keeps trending, it keeps trending. We'll just see how it plays out when the time comes. Right now is to get ready. Because again, weekly chart, it tried to hold this area. This is the Russell. It didn't, right? After several weeks, and it looks like it should go down here. How to get on board this? Well, we're going to talk about that Wednesday, but what we have to do is just pick a reference point in the time frame that we of our choosing. Right? If we want to use an hourly chart, a 15-minute chart, obviously, if you use a 5 or a 2-minute chart, greater likelihood of getting stopped out on some blip. But in any event, when things are moving in that way, you have to pick a point. and say, okay, this is how I'm going to get in. And, let's, again, assuming it's going down to that level, which is a decent amount, get short. And, however you're going to play it, meaning small lot entry, look to add whatever your entry is, bigger stops, smaller shares. There's different ways to do it, of course. But the thing is, we have a bias based on this weekly chart and the way things have been trading, that ultimately this support level is where buyers are going to want to step up. And let's see what happens, whether it can get down there or whether a different pattern forms. Remember, we have different rules and concepts. So we start with something like this, where here's the void down to support. Well, what if it forms a different pattern to suggest it's not getting down there? Well, we've got rules for that as well. But right now, we don't have any such pattern. So we are assuming that it's going down here until proven otherwise. Qs, a little different, meaning its support levels are closer. I guess this had the bigger drop initially, and it's holding here. Semiconductors held up pretty well on Friday. I think it was one of the few sectors that were actually up a small amount on the week, other than the utilities, which have been doing pretty good this year. But semiconductors and some tech stocks actually did okay. Let's just say they didn't do great. They did okay. Good morning, Pat. So can it hold this level? I wouldn't think so. If the Russell's going down to the levels that we just looked at, and the transports, I wouldn't think so. So we'll just see where this holds or whatever. And it's got some more support down here. They do, Frank. And I talked about that last week, but look, markets acting in this way, you have to look at it as what's the weight of the evidence, so to speak. So can the transports and the Russell, and we'll look at the S&P, are they going to drag the Qs down, or are the Qs going to hold up the whole market? Now, we know inevitably anything is possible, but it doesn't seem reasonable that the Qs aren't going to be dragged down if everything else is going down. So, but we're going to be objective about it, and we're going to look at this, and, we may be like stunned, how is this actually happening? And that thought will lead to what's holding up, right? So what's showing relative strength at that time that is actually holding these Qs up. And as we looked at different things last week, I saw Twitter that looks good, actually looks great compared to a lot of other stuff, was holding. Square rallied, PayPal rallied, Amazon didn't, right? The 800-pound gorilla didn't rally up. So different things, a lot diverging type of things or changing things. Apple initially was holding, and then it didn't. So we'll assess all of this as it unfolds here. Right now, markets are down, and so now we got to see down in relation to where, meaning what support. Spiders, right? They're lower here, and we got this level right here. Will that hold? Another, again, know your levels, set alerts, and be prepared. So looking at the futures, and so this is, the S&Ps. This is where I'd look for them to hold. You can already see, this is this week right now, just trading inside of last week's range at the bottom. And, what we had said back at this time, this bottoming tail bar, we talked about whether, and this was the big weekly bar, this big bar. And as we always do when we look at a wide range bar, we say, okay, well, just can it get past the halfway point? Can it close there? Right? Can it close past it? And then we see this bar, and it couldn't close beyond it. Topping tails kept forming. And now we've got a new wide range bar, but so far S&Ps are holding that low right there for now. So just same story, looking for it to go lower. Right now, it's just holding this level for the moment, and we'll see. And looking at this bar, can it get halfway past that? Well, if it does, and we got a big green bar, say the end of today, while this is still in a downtrend, I've got to now start to rethink coming down here a little bit, because this is a pretty powerful move and giant bars down. And, so it's not an easy call here. That's for sure. But at the moment, expectation is it to go down until proven otherwise. And if today was to close at 26.50, negating that big red bar next to a bottoming tail bar, I'd have to start thinking that. I mean, bar by bar, it's an objective approach, trend, pattern, bar by bar, intermarket analysis, meaning, just like I said, what's the Russell doing versus the Qs and the transports and what's going on. So, and you assess all of this, to come to some objective, reasonable bias as to what's going on, right? NASDAQ futures, right? So there's that low. Is it a head and shoulders bottom, or is it just, where it's lower highs at the moment, a higher low where the range is tightening up and it's just getting ready for the next run to the downside, down into here? Set your alert, see what happens. Right. Same thing with the Dow. And so we just see a similar pattern here. So far it's weak, and so on. I'm going to go to the 60-minute chart and just getting through this quick, but you see what we're doing here. We're taking a higher time frame to see what's going on there. So we have bonds in a downtrend. They've retraced, eyeballing this 75%, maybe 80%. Decent rally off of the low, but in a downtrend, sellers should show up here, but we don't have evidence of that on the daily time frame, not yet. This is trending up. It got through the 200. Does it stall here? Is there any resistance? Right, step by step, it's in an area where sellers should show up, but ultimately, if it keeps trending higher with no bearish patterns, we'll assume that maybe it's going to come all the way up to here, and that is where there'll be a large amount of sellers just waiting. And oil just can't get off the mat, is chopping around here, and it had better lift off here pretty soon, or it's going to be heading down here. Right? When prices make a run like this and they stabilize, and you start to see big green bars being ignored like that, that's a bad sign. You got volume increase, it still can't go up. So breaking below this level should end up with prices coming even lower. And it's kind of similar to what bonds are doing here, which is a little unusual, but gold is grinding higher and moving up towards some resistance, and we shall see what that does. And just looking at the intraday pre-market timeframes here, gold moving up. You can see the bottoming tail bar there, setting up not the greatest buy setup, and I say that because it's retraced under the green wide range bar. Ideally, it stayed here and had a continuation pattern up. It couldn't do that. Just slop going on there. Bonds, again, in the area where it should turn and try and go up. And here's the Dow coming into first support in a downtrend, a little bit of stabilization, which is normal after breaking the low like that. In a downtrend, typically after they break the low, especially with a wider range bar, you get stabilization. Not a trend reversal, but stabilization. You need MT live on buy setups. Okay. And same story with the NASDAQ futures. Similar pattern, downtrend. We got this support down here, which is going to make this choppy, erratic. I mean, we don't have a decisive break here yet. And we've got this NASDAQ futures and the Qs here showing a little relative strength. And we've got the Russell and the transports that are relative weakness. And Which one is going to pull the other in the other direction? We don't know just yet, right? But the bearishness of those weekly charts suggests that this should go down. Now let's see what's going to happen. And we got the S&Ps again, as explained, same downtrend, coming into a little support right here, which is the low of that bottoming tail bar. But that bottoming tail bar could not produce a rally, and it was met with selling, and that's bearish. And so now, trend being down, the expectation is that prices are going to go below that level, right? So there it is for our plan and expectations. Just looking at the internals here, we need sentiment to get a bit more bearish. And I think if we to get a flush to the downside into that FOMC 2 o'clock on Wednesday, we just might have a scenario for a minuscule Santa rally, or to what extent there'll be a Santa rally in the short amount of time left. We'll see how that plays out. So there you have it. All yours, Dan.
All right, thanks. Good morning, everyone. And I totally agree. That's my kind of prediction bias. We've been looking lower, and I think Wednesday's going to be a big old event that, regardless of the outcome, I hope we get a shakeout on that. We mentioned in the weekend letters, the Fed futures are predicting 75% chance of a hike on Wednesday. But remember, for months, they've been predicting three. Yeah, Tony, we'll look at that. I know we're in it. They were predicting 3 rate hikes next year, but now the Fed fund futures, according to Barron's article, was saying only a 50% rate hike for next September. So that is way down. Open positions, yeah, Qs, we had a put spread at 159, and we did it on a great day, you know, on the right, I think on this continuation day, or even this one. And it failed with it. Well, it hasn't failed yet, but this was the strongest of the 4 ETFs. We had a covered put on IWM, among others, that expired at maximum gain on Friday. I have our stop is 159.38. We'll keep it there for now, but yeah, I'm watching it. I was trying to leg us into an iron condor on Friday. And then as I was typing it up, it dropped so fast. I'm like, shoot. So yeah, we're in that, Tony. Let's see. Chud, CHD, we still have 2/3 of a lot left. Mo, we're short stock. USO, we have a put spread. And yeah, it's not ready yet. I just sent out another video. I've been watching this for a while. Hedge funds blowing up, etc. But on this bullish island gap up reversal day, we sold the 10.5/9 put spread, and we're at 50% of max profit. We're good, even though the thing went against us. I said in this morning's video, over this high will be a directional long, but you know, we'll see how it shapes up. Might start nibbling with some put spreads over Thursday's high. Triple N was one of these REITs we're still in. UAL, we have a call spread. SCG, this was one, we had a nice one-day put spread, and it's still bullish. I'm going to keep an eye on that for another trade. So Twitter, put spread, we don't have much open. XPO, I sold myself a put spread on, a naked put on Friday. A couple here we're watching. This is strong. You know, so some of you might have wondered, if you all think the market's going lower, why did you put in all these bullish trades? And the answer is because it's hard to get on board right now. We're definite in, you know, day trade short mode until we get a bullish intraday setup or washout. But all of these long put spreads, or even long stock, like this DM, we're going to go long over the high. all time frames are in alignment. And there's only one reason that that looks this way. And it's because demand is greater than supply. And so this could be setting up what we call a measured move type thing also. This 2-3 bar jiggle, red bar ignored. So that looks great. Let's look at a couple of gappers real quick. CNC 119. That's a bearish monthly chart now. That's a M top. 119's way down here. I don't know. PCG. This is one of the California utilities. It's gapping under this support. Costco, just on my list from Friday. Adobe, I was looking at, and I was trying to find call spreads. And we would have to have gone out 2 weeks to get good juice, because over the high of this breakdown, it wasn't enough for me to want to take the risk ahead of FOMC. BBY. Best Buy, $52. Wow, that's an ugly gap down. I actually went into that store on Saturday here in Lauderdale because I needed some printer ink. The store was very busy. $48. This would have been a call spread candidate, selling the 56s or whatever. Jack, anything green today is relative strength again. So this one's gapping up $85. That's a bullish gap. I'm going to put that in a window. That could be I don't know if it's earnings or I don't know what it is. Look at this J&J's been all over the news this morning again. We'll watch it. There'll be a day where we can sell a put spread. BECN, I just came across this. As in an old slide I made, and this was a bearish gap that bullies trade on this day. The gap down sliced through this intraday resistance within the first 30 minutes. That's not ready. NVIDIA, we had a put spread that we got stopped out of on Friday, and now it looks like it's hanging on by a thread. Maybe 30-minute low. I'm afraid to short, again,